Hello, and what a week it has been. Last week on Wednesday, oil futures went negative. COVID-19 keeps the stock market at bay, but still there's opportunities out there left and right that keep on going up. My name is Chester Johnson, and in this web series, we go through different posts on StockTeamUp.com to help you understand the current meta of the stock market. Before we begin, check out our site, StockTeamUp.com. Please follow us on Twitter at StockTeamUp and like our Facebook page. So let's start with oil futures. They went negative last week on Wednesday. This is an unprecedented event that occurs, but not a crazy one. To be clear to the beginning investors, oil prices didn't go negative. Oil futures did. That means that a trader who has the opportunity to buy in the future didn't want to buy it, and instead of taking on that inventory of oil, they would rather sell their future for an actual loss, actual negative value loss, than go ahead and take that oil in. This makes a lot of sense when you think about it. I was talking to some financial friends last week, and what they said was, when you're a trader, you don't want to take on that inventory, obviously. There's a cost associated with that. So it's better to just give away the oil, ask for people you'll pay them to take it away from you, and then you're wiped clean of that inventory. So unprecedented, but not spectacularly crazy. What's been really wild is Tesla. So Tesla, I will fully admit, I've gone in and out. I thought, well, a 40% return is okay, but how wrong was I? Because it has skyrocketed since the times when I was playing around with it at $200 a share. It's roughly around $700 to $800 right now. But if you ask why is Tesla doing so well, the numbers are just speaking for themselves. The performance just keeps on beating expectations. It keeps on going. There's definitely a drive culturally at Tesla to perform very well, and that culture is obvious in its performance numbers. Their revenue is just going higher and higher. They're taking up more market share. They're leading by far in electrical cars, and they're making a cultural change, and they're the forerunners for that. So I personally, after reading a whole bunch of stuff on Stock Team Up, I've given in. I bought at all-time highs for Tesla. I went for it. I got very just insignificant amounts, but I'm okay holding it for the next 5 years. As long as this culture continues of strong performance, I don't think you can do too poorly with Tesla as long as you understand that you don't want to buy into high exuberance, which will drastically misrepresent the price. So I posted this right now. When you look at all the charts, it looks like there's a resistance to normalcy. It's kind of breaking through today, but there's still a lot of seesawing back and forth between this line. I used Raytheon as an example here, but it's the same through all the lines. Through S&P 500, it's about 2,600 to 2,400 points. What this means is the market doesn't want to go any higher. It desperately wants to go higher, but it won't. There is a wait and a pause. There's this resistance to normalcy. So what that means is once a decision is made, once the herd kind of just decides that this is done with, or it's not going to be done with, it's going to drastically fall one way or another. It's just not going to stay here long because there's definitely a tipping point that's going to be coming where people just make a decision that this pandemic's over or not. Being the optimistic person as I am, I believe it's going to rise up. There are too many stocks significantly undervalued. A lot of them are currently trading at below book value, which is typically a sign that people's fears are overreacting to this current market. So I would be bullish right now, with the note that the market was already overvalued in my humble opinion. So going back to normal where we were at all-time highs may not be something that's going to happen this year. But if you like a company, I wouldn't be afraid right now to give it a shot. Tom is a great retired investment advisor down in Georgia. He just gives us these great postmortems on Stock Team Up. As one of our top performers, he really has deep insight into what's going on in the market. So if you look here, pretty straightforward, nothing too drastic, but really great for beginning investors to understand what happened. Uh, this pandemic was definitely a trigger, but other problems were already happening in the market. If the market didn't have problems, it probably would have already bounced back, which might be crazy to say with unemployment so high. But assuming the unemployment is a temporary thing, which it may be a really bad assumption, you would think that this would jump right back up. The problem is people were buying stocks with high amounts of credit. And each time you see that throughout history, and then there's a fall, it's a domino effect as people lose money because their positions have been wiped out, and now they got to pay more to the brokers because they have a margin call on them. They have to sell more stock to break even now, and that just spirals out of control. A lot of people lost money during the pandemic, and lots of people lost multiples of the loss they actually took because of all the margin they had. So you have to be careful right now. I just said I was bullish, and now I'm telling you I'm bearish. But you have to be careful right now because just because there's opportunities out there, there's still this problem of credit that's going on. So you have to be very wary. When you make your pick of a company, make sure you're ready for a 2-year hold because this has to clear itself out, and it's chaos right now. It's absolute chaos, and a lot of things can happen in 2020. So thank you very much for listening today. Again, hope you check us out at stockteamup.com. Follow us at on Twitter at StockTeamUp and like us on Facebook. Thank you very much and have a great week.